Hey everybody, I'm Greg Boss and president of QuickBooks Made Easy for Nonprofits with this month's Quick Tip. This is the tip for June of 2022, and it's a tip that we put out at QuickBooks Made Easy for nonprofits across the country. This month's tip is on dealing with capitalizable costs. And specifically, this month's tip, I'm kind of excited about it, is sponsored by an organization called N10, which stands for the Nonprofit Technology Enterprise Network. And if you've never heard of them before and you're in the world of nonprofits, you probably want to check them out. Here's their website. They actually have a huge conference every year, so you should go to the website and check them out. Now, myself, I am a CPA that specializes in nonprofit organizations, and I'm also the owner of QuickBooks Made Easy for Nonprofits. So let's get on to the tip. So what exactly is a capitalizable cost? And this is something that all businesses have to deal with, but I want to talk about the rules for nonprofits. First of all, a capitalizable cost is a cost, you spend money, but it doesn't get expensed like salaries or rent or travel, doesn't get expensed. Instead, it gets pointed to an asset account, a fixed asset account that's on the balance sheet instead of the profit and loss, and then it gets depreciated. So I like to show things. So I will just go to Quickity Books here. So what I mean is, instead of pointing something to an expense account here, we point it to a balance sheet account here so that it appears with the rest of your assets. So, and by the way, I can show you in the desktop version too, for those of you that are using desktop. Instead of being here, it's going to be on the balance sheet, which I think I may have pulled up. I'm not sure that I do or not. Yeah, there it is, balance sheet. So instead of it being here, it would appear over here. All right. So that's what I want to talk about, how to decide when something is a cost that gets put on the balance sheet and gets capitalized. Okay. So now the definition I'm going to give you is based on GAAP. That stands for Generally Accepted Accounting Principles. So basically the accounting gods have decided when you capitalize stuff. Okay. Two things, if both things are true, then you capitalize it. One, it benefits you for more than a year. All right. Now, I bought this stapler 27 years ago. Okay. So it's benefited me for more than a year. I'm not capitalizing it. Okay. And the reason why is because of the second thing that has to be true before you capitalize it. It has to be large enough in dollar amount. That thing cost me 30 bucks. It's not large enough. So it's got to benefit you for more than a year, and it has to be large enough. Now, what does large enough mean? All right. Now, you're going to hear people tell you that anything over $2,500, the government says you can expense, and anything anything under $2,500 you can expense, and anything over you have to capitalize. That's an IRS rule for taxes. That doesn't have anything to do with us nonprofits because we don't pay taxes. All right. So you tell those people they don't know what they're talking about. Okay. That has to do with taxes. What is large enough? You or your organization decides the dollar amount based on the size of your organization. Okay. So you decide the amount over which costs will be capitalized, and then you document this with a capitalization policy. All right. So don't freak out. A capitalization policy, it's real easy. Here's a sample one. Just write it up, get the board to vote on it. The organization records fixed and intangible assets meeting the following criteria: useful life of more than a year, always got to be true, and cost of, now I put $1,000 here, you could be 2,500, you could be 5,000, just depends. Okay. Now I will stop here. Those of you that are begging for me to tell you what that value should be, I'm not going to. Okay. But I'll give you some general ideas because you can pick it. But in general, most people are going to pick $1,000 until you get up into where you are making, multi-million dollars a year. Then people raise it up to like 2,500 or 5,000. Having said that, I've seen 10,000, I've seen 500. It's up to you. You vote on it, you're good to go. Okay. Now, another thing that should be in this capitalization policy is the executive director annually should look at the fixed assets and update it for disposals or impairments. That's the whole policy. That's just a sample. There are others you can Google. Okay, just Google capitalization policy samples. But anyway, all right. So here's some examples of what would be a capitalized asset, assuming that it's over the organization's threshold and then it benefits them for more than a year. Okay, furniture, equipment, improvements to an office space. Okay, I'm not talking repairs, I'm talking something that extends the life. So fixing the toilet wouldn't work, but putting in another toilet would. It extends the life for the value of the asset. Then you can capitalize it for more than a year. Okay, buildings and land, computers, vehicles, smartphones and tablets, software. Okay, now not software rentals, not where you're going a subscription once a month, because that payment is only benefiting you for a month. Remember, it has to benefit you for more than a year. So if you purchase a piece of software or you have someone develop a piece of software, then yes. Okay, like I have these nonprofits that have these sophisticated database softwares that they have built. Those can absolutely be capitalized. Okay, all right. Couple of things that's good to know. If you buy a group of assets purchased together, they can be considered one purchase when deciding if the amount is over the threshold. Okay. So what I mean is, let's say the threshold for capitalization your organization has decided is $2,500. Excuse me. All right, real life. $2,500. And you buy 30 chairs that cost $100 each. Okay, so the total is $3,000. Okay, what you want to do is you consider this a purchase of one item, 30 chairs, that costs $3,000, so you capitalize it. Okay, you capitalize it. You don't consider it individual chairs for $100. Okay, so you can group like things together when you purchase them all at once. Okay, another thing. These are other things good to know. This has to do with hardware and software in particular. Again, not subscription services. Even if you're paying annually, it's still only benefiting you for a year, so you can't capitalize it. Okay, but if it's more than a year, you're really buying it or having it built. Yes. Okay, software and hardware. Purchased hardware and software. What does that mean? It means the cost of the purchase. It means the cost to develop. It means the fees for installation and testing. And also, if you've got old data that you need to migrate to the new software, the cost of the software, listen carefully, the cost of the software that allows for the conversion, a lot of times you have to buy software that allows for the conversion, that can be capitalized. But the actual cost of paying somebody to do the conversion, that cannot be capitalized. But the cost of the software itself to enable the conversion can be capitalized. Okay, that's part of really purchasing the hardware or the software. Okay, upgrades. If you upgrade your software, only if it adds additional functionality can you, and of course it's going to last you more than a year, can you capitalize it, provided it again is above whatever your threshold is. Okay, do not capitalize the cost of training or maintenance, okay, when it comes to software or hardware. Another thing, sometimes you'll purchase from a third party software that includes multiple elements, okay? Software, installation, training, maintenance. What do you do there? What you're supposed to do is you're supposed to split the cost based on your estimates of fair market value. You split the cost between the elements, okay? And then each element is treated accordingly. So here's an example. You got a $10,000 contract. The software and installation you've decided is 8,000 of that 10, that will capitalize. The training, we're going to expense that, and we're going to expense the maintenance as well. All right. So I think that's everything about the tip. There is one other thing I wanted to show you, which I think is kind of cool. And that is, a lot of you will want to expense your fixed asset purchases and your intangible purchases anyway, so that you can look at it compared to a budget. So even though it's supposed to be a fixed asset, you want it on the P&L so that you can do a budget for it. So here's a little trick. What I do is I have created, let me move this down here, an expense account. Now this isn't GAAP, but again, it's okay during the year. I've created an expense account called fixed asset purchases. That way I can do a budget for it. Then I point the purchases to it, okay? And then I created another account all the way down at the bottom called back out of capitalizable assets. So what I did was I expensed it initially so I could do a budget for it. And now I'm going to back it back out so that instead of me saying I earned 10,000, which is I really earned 20 because this is an asset purchase. I backed it out. So see what I'm doing here? I'm putting it in up here so I can run a budget for it. And then I'm taking it back out down here so that I can put it on the balance sheet. Let me just go to the balance sheet and you'll see where it's on the balance sheet. There it is on the balance sheet. Okay. So if you want to know more about how to do that, or you just want help with your QuickBooks at all, please check me out on QuickBooks Made Easy for Nonprofits. It's QuickBooksMadeEasy.com. Catch you later.